Good afternoon, ladies and gentlemen. Welcome back to another video. And as always, if you are new to the channel, a sub would be really appreciated as I provide valuable educational content on a daily basis. And if you enjoy the video, please smash the like button for the YouTube algorithm. And as always, let me know down in the comments below exactly what it is that you would like for me to cover in my next video. Now, if you are new to the channel, today we are going to look at the Usdcad from a technical and fundamental perspective. We're not going to look at sentiment data or order flow data because the week is almost done, and we are expecting new data to come out tomorrow, and we already know what that data is going to look like. First of all, we know the CAD's quite weak in terms of fundamental data. We also know that fundamental data drives the long-term momentum of the market. The reason why I've selected the Usdcad is because of how we can expect the dollar to get strong in the long term and the short term, and we're going to be discussing all of the reasons why. Now, if you're not familiar with what the CPI is, the CPI is the Consumer Price Index, measures monthly changes in prices for a range of consumer product. Changes in the CPI record the rate of inflation. The CPI can also be used to calculate the cost of living index. Good. Now that you understand what the CPI is, let's jump straight into it, ladies and gentlemen. Now, firstly, we know that as when I spoke about the Usdcad, the market had broken below that level of resistance. The market tried to test it multiple times as a level of so this level got broken as support. The market tested it multiple times as resistance. The market, however, failed to break above that level. Then what the market did, it came back and then it got stuck into this consolidation phase. However, the market then printed this impulse because we had a clear break below this previous level of resistance that got turned support. The market broke below that level, came back, rejected it a couple of times, fell to close above that last week. So the market had given us that impulse, and if you take your Fibonacci there from the low to the high to identify the target, so if you take your Fibonacci there from the low to the high over there, we can see that we can definitely target this level as our take profit level in the future as well. Let me just remove that. So if we drop down on the weekly time frame, what do we see? Now from a weekly perspective, it's very clear. The market had printed this weird looking W formation. After a W formation, you expect to pull back to the neckline before the continuation. Looking left, you can also see how the market printed this very important structure. Now this level acted as a level of support. Support got broken. The market came to retest it, broke below that, broke above all of that resistance, and it's now testing it once again as support. And with the positive fundamental data for the US dollar, we can definitely get that continuation to the upside there as well. And we're going to identify that as our first take profit level in the market as well. Now from a daily perspective, what do we have? Now on the daily time frame, we know that the market was consolidating, and we can also see how the market had tested this very strong level of resistance. The market now has the opportunity or the potential to print this W formation, and after that we could potentially see the continuation to the upside. As we have it now, this is acting as a level of resistance. What we need to wait for is a clear break above that level. Then on the retest, start looking for buying opportunities for the market to hit the minus 27 from a monthly perspective. Now we know that the consumer price index came out. Okay, the index rose to 0.6% in its January assessment, which was expected to be lower at 0.4%, and the previous was sitting at 0.5%. Yearly US inflation both this month and next month has touched potential 8.5%. That was basically the highest level that it's been since 1980. One thing to keep in mind is that the main index in the annual changes, for which the expectations were 7.3%, reached 7.5%, and the previous was sitting at 7%. Net consumer spending on the annual benchmark, which was expected to be 5.9%, actually increased. So people were spending more money there as well, which was good to see. And the previous was 5.5%. We also had the unemployment insurance weekly index released at 223,000 in its assessment for the week ending February the 4th, which was forecasted to be 230k. Now the previous was 238k. Now that means basically is the amount of people that filed for uninsurance claims, and we obviously expected that number to be low because we had a high NFP data roll that came through, and because the NFP numbers were so high for January, less people had obviously filed for uninsurance claims there as well. Now, I don't want to drag this video out for too long, but this is the current situation that we can trade for gold in the short term. Now, if you are a swing trader, here's a good opportunity for you to take this nice trade and you can swing it till the end of time. Now, that's all from my side, and as always, cheers for years.